What's up, guys? Philip at Trade Genius. Well, we got some news that the Tunisia and Afghanistan countries are looking to issue sovereign bonds based in Bitcoin. We're going to explain a little bit what that means and the huge implications that has for Bitcoin. So, without further ado, let's dive into this video and check that out.
Trade Genius.
All right, so what is a sovereign bond? Some of you may know what this is, but basically what we're looking at is a debt security that's issued by a government. So it's a way to raise money if the tax revenues aren't enough for things like infrastructure projects or social programs, things of that nature. So they'll issue these sovereign bonds. Now, what the Tunisia and Afghanistan markets have done is they want to issue them based in Bitcoin. Now, you're talking about the global bond market is in excess of $100 trillion. Okay, so that is a huge amount of money that's tied up in these markets. If you start funneling just a tiny bit of that into Bitcoin-backed sovereign bonds, you're going to see a huge increase in market cap for Bitcoin, which means a huge increase in the price of each Bitcoin. So what happened here with the Afghanistan bond issuance, for example, and we can dive into, News BTC broke this, so we can dive into this article a little bit and explain that. All right, so in the case of Afghanistan and Tunisia, they're issuing sovereign bonds based in Bitcoin. So if you're a country, you can denominate your bonds in a certain currency. Now, most countries don't have the luxury of doing that in their own currency because their currency isn't stable. So as in Afghanistan's case, what they're looking to do is utilize cryptocurrency and blockchain technology to raise about 5.8 billion, okay? And they would pair Bitcoin with a form of metal futures such as lithium. So they actually mine lithium in Afghanistan. So what this is going to do is it's going to expose its $3 trillion lithium sector to investors across the world. And I mean, lithium's in huge demand, right? Because of all of the use cases, batteries, cars, things like electric use cases. So why did they opt for Bitcoin over traditional assets? Well, primarily because the governor of their central bank blamed the post-war conflict in Afghanistan, raised the risk of their debt. And then the IMF exposed the country to severe restrictions on non-concessional financing. So basically what that means is developed countries, other countries were less likely to invest in Afghanistan due to the instability, on their currency, on their government. So what they felt what they could do to better access markets was to get into the blockchain space in crypto and issue their sovereign funds or sovereign bonds based in Bitcoin. So there'd be more stability. So this would be, instead of going to a more traditional fiat currency like the dollar to base their bonds in, they're using crypto, which is a huge step because, again, this was part of the roadmap where you would start seeing Bitcoin in particular, if they started to use it as a reserve asset, if you saw central banks giving it the green light as a reserve asset on central bank balance sheets, this is where you see those multi-trillion-dollar asset markets start funneling into Bitcoin. And Bitcoin only has 21 million units ever that'll be produced. A lot of those have been lost. So in reality, we're probably looking at more like 16 to 17 million in circulation. That is going to be an extremely high upside for the valuation of Bitcoin. What was also interesting was that at the World Bank and IMF 2019 spring meetings held in Washington, this was brought up where cryptocurrencies like Bitcoin would be a potential solution to debt distress or high-risk debt levels. And discussions went on to question whether or not the current international financial architecture was able to prevent debt and economic crisis. And then toward the end of this article, it's interesting, is IMF Director Christine Lagarde said that governments should initially issue Bitcoin bonds using a closed and supervised approach. So we've gone past the stage of whether that's even a good idea or a questionable idea. It's okay, do it, but do it in a way that's safe and supervised. So what you have to start looking at is that we've now crossed over to where it's now they're looking at how to implement Bitcoin in this regards into sovereign bonds and things of that nature as a reserve asset. And this is a really huge deal. I'm not sure how much exposure this particular news article is going to get in mainstream media, probably not a lot. So those of you that are early adopters and are in this space and paying attention, this is a big deal. This is one of those headlines that kind of will fly under the radar, but has huge implications because that starts, it starts the inflows from these legacy asset classes, which are worth, trillions and trillions of dollars. So we're starting to see inflows from things like pension funds domestically in the US, and now you're starting to see just the beginnings of what we could see is Bitcoin denominated sovereign bonds. So this is a huge deal. Now, when people talk about long-term on Bitcoin and rising valuations, and they say, you can't expect the type of growth waves to continue, but considering that, here's a long-term chart of Bitcoin, and considering that, we've highlighted kind of the areas where typically the bottom is put in and the next cycle goes up. And as we are talking about, we're heading into the next halving cycle. But for these valuations and these market caps, right, we're talking about market caps to send Bitcoin into the six figures, you have to have market caps in the trillions. But when you start talking about these markets that have trillions and trillions, hundreds of trillions of dollars in market cap, and haven't even stepped foot into the Bitcoin space, we're just starting to see the initial movement into that. This is where you're going to see that kind of move higher into those six-figure realm. And really it's because you're just funneling an immense amount of money into a very finite asset class. So it's just math. And you're not seeing government shy away. You're actually seeing them probe into this. And, being that Bitcoin, the oldest, the longest blockchain, battle tested, it's the most trusted. So this is where the money is going to go to. It's where all the big finance has accepted that this is where the store of value is going to be. This is the blockchain that's going to be used. So guys, again, there's going to be a point in time where no one's going to be able to own one Bitcoin. It's just going to be too cost prohibitive. We're still in the era where you can feasibly, somebody at home with some savings could actually own one Bitcoin. And if you've been with us, then you've had the opportunity to accumulate several Bitcoins. And there will be a time when, if you have one actual Bitcoin, that's going to be a huge deal because of the valuation. So again, guys, just big picture stuff, but you need to realize when these things start happening, I like to point them out because they have huge implications for the direction of Bitcoin and ultimately where the price stabilizes for Bitcoin, which we believe will be well into the six figures. So anyway, guys, I hope that helps. Thanks for watching. Please hit like and subscribe, and I'll see you in the next video. Okay, guys, take care. Bye.
Trade Genius.